Hey everyone, it's me, Latoya, from over at the Profit Room. I am going to give a recap. I want this video to accomplish two things, and that is one, how awesome swing trading is. The second one, or second goal of mine, is to highlight option trading as well, because many people, they have small accounts, and to grow a small account, one of the best ways to do it is by trading options. We provide our alerts in terms of alerting the actual share, but what's beautiful is these are technical entries. Therefore, once the share price hits, you can also take that actual option. So being a buyer of options is what we favor, because people with small accounts can grow their accounts that way. Being a seller of options, you have to have some capital, decent capital, in order to utilize the different option strategies that are available: cover calls, butterfly strangles, etc. But buying options is really simple, but also with the technicals, it can really be a huge advantage. So I'm going to go through only the stock trades, nothing with the forex or the future side. I have 3 weeks current. So every Sunday we do send out alerts. So the most 3 recent up until this past Sunday, which happens to be the 21st. Today is Wednesday. All right, so let's get into SQ was our buy. Sunday the 7th, we wanted to buy it. Monday market open has to hit the technical entry point of $74.53. Here's our chart. The weekend, right? Saturday and Sunday's the 7th. So here's Monday the 8th. We did not get trigger. 74.53 is the trigger point, so it happened on the Tuesday. And this is what we love about technical breakouts, because you get moves, and it's like powerful moves, breaking all the resistance, pushing to the top of the channel. This from here, this is about a 9% gain in terms of the movement with the shares. It's beautiful. So you can equivalent that to about almost $8 per share or something like that. What I'm going to do is go back in time to when we gave that alert, going into the actual option chain. So here's SQ, and since it was the 7th of July, so I will have to get more of the strikes if I can figure out how to do that. It's not like my desktop where I can actually just see more of it on here. Here we go. So let's do 14, and I'm just being realistic in terms of they probably won't let you go back. Yeah, they only let you go forward, which is fine, because I would have done something like probably 2 weeks out of in terms of expiration. So we can go ahead and do this. I would have bought 75 since the alerts were at 74.50. So I would have probably bought 1 strike or 2 strike out. Sometimes I like being even cheaper. I could go further out the money. It's all based on technicals and how much you believe in the move, in terms of how fast can it actually get to your target. Now let's just do the 75s. So what I'm gonna do, I want to pull up these actual options into the same chart, so we can have a visual of what occurred on this day, where that option price was. So let's say 100 shares times the 74.53 entry point, you would have had to use $7,453 just to buy 100 shares of the actual SQ stock, whereas the options would have probably cost you $2, because this is the breakout. So let's say, yeah, about $2. So it will be $2 times 100, because that's how options work. It's like having 100 shares, so you have to multiply it by 100, the option price. So that's $200 for one contract. Now let's just use one contract. That's fine, simple math. Now we sold that one contract at $7.75. Yeah, being the high, but this is just only for mathematical purpose. That's $775 minus the $200 you spent. You would have made $575 utilizing only basically $200. So that's well over a 200% return. That's the power of options, especially when you do things the technical way. The second stock, CBS 5605, we did not get triggered into this trade. It actually happened to gap, here it is, above the entry point, but we did have members get in the trade anyways. That's another story. Target was up here 60, and look, trail stopped to 60. So everything with us is very technical in terms of the way we day trade, swing trade, stocks, forex, or futures. It doesn't matter. Everything works off the same principle. AMD was another. It was a bonus. Third trade given. Now, this entry price, this was over here because it's the same 8th. And I have my charts a little bit marked up because I was explaining this actual trade to someone. 31.50 to 36.60 was our entry range. So this was the candle we got filled on. It opened lower. I would never forget this day. And we wanted to come up to trigger us. So we're in the position, and a lot of our members made over 200% return on these options that they took. Our first target was basically right around 34. And you can see it here. 34 had earnings. We never want to hold during earnings at all. But great movement, great gains. Let's see if we can revisit the options. And I'll probably do it for one more trade. I'm not going to go through all the options in this case. So the same date. Let's see, 31.50. 31.50. So my cheap self would have probably went out the money a little bit. 32 to 32.50. I'll just do a strike out just for simplicity. But during the time, I know I probably would have been looking like, you know what? Let's go further out. So this was it. $1.50. This was the move. That's it. So this one worked out to be well over 100% return in the AMD options. Let's proceed to the next week. We also did have trades in progress from the prior week before. I'll pull up those charts, PM and VMW. And I think you all get the point with the options. I'm not going to go through the option result with each and every one. Just know that when you find technical trade setups, we got in on this right around here. And this was an earnings gap. We only hold after we realize profit on most of the position. Earnings is more so 50-50 in terms of you're hoping it will gap up, and sometimes it gaps down on you. That's what we mean by 50-50. Other one was VMW. These were the trades in progress. This one was a quick one. Just break on the support. That was the cover. Very short trade. But look at the monstrous move to the upside after it hit. It basically hit a technical support. This was our, actually we didn't get triggered. We didn't get into this trade. It did not hit. So you see 77.93. It never got there. This thing fell off a cliff. So that's why technical entries are important. So when you do not get your technical entry, you do not prematurely enter the trade. You stay out. So this one was canceled via our Slack room. Now let's proceed to the week of Sunday, July 21st. This was sent this past Sunday. Saw this nice technical setup, right? Close your eyes. Just imagine a little bit, then reopen your eyes. It looks like another flag to break out, and that's exactly what happened. So it broke out. These options moved 250%, as I mentioned. I will go to the FDX chart. We bought the second. We bought 170 calls. We bought it out of the money. Let's get, so they were trading around 168 and change, almost 169 when we bought these, because this was next. This was a little bit too in the money when price was already out of, well, above that. So we went a strike out of where that price was on Monday when we bought these options. Here's the chart. Did I do? I don't think I did that right. So let's go back to the actual option. Oh, okay. I know what happened. There we go. Here's the date. $2.47 is what the team got filled on. Specifically, these options moved as high as $8.70. We did sell contracts yesterday, about 5, held one for today, and the exit price on this was $8.50. Now, major move. I just wanted you to visually see why it's so important to understand and get technical, get real technical with your charting in order to find the best risk to reward in any swing trading setups you may find. Hopefully this video was insightful, helpful, and delightful. All right, everyone. Any questions? You can always email us. My personal email is latoya@theprofitroom.com, or you can email admin@theprofitroom.com. All right, everyone.